Thank you very much. If from the floor, if you have any questions, could you please raise your hand? In the meantime, very quick question from you, Tariq. You know, Thomson Reuters has recently launched this Islamic interbank benchmark rate. Quickly, in 1 minute, what is your opinion on it?
I think it's good. I don't know much about how it works, but from the bankers that I have talked to about it, they don't know how to use it. Right. They're comfortable with LIBOR. They see no issues in benchmarking to LIBOR. From a Sharia perspective, they haven't had any questions on using an Islamic benchmark. So I think it's a good product to develop, but I don't think there are any users yet. So it'll take time to see whether or not that's successful.
Right. I hope the market grows. Of course, it takes time for a benchmark to become popular in the market. Yes, please.
My question is Ishaq Al-Ma'wali from the Public Authority for Social Insurance. I'm talking from the point of view of investor because we are a pension fund. And when we look to the instruments that the Islamic finance is offering us, actually we don't have, can we compare, for example, Sukuk with the normal conventional bonds? And one of the speakers mentioned that it is less volatile, and this is what we are looking for as an investor. We are looking for a reasonable return with less risk. Anybody from the panelists can explain to us, maybe because we don't have that a great understanding of the asset management within the Islamic finance, anybody can take this example of Sukuk compared to the bonds and tell us how the Islamic Sukuk is less volatile, and how do you define the volatility in Sukuk? Thank you very much.
And how is a Sukuk more attractive as compared to a conventional bond? Rehan, you would like to take on it?
Sure. Before I actually come onto this, I mean, this is a question we go into a lot, especially with regional investors, where we expect them, or let's say the investors from institutions in responsible positions, we expect them to take as close a look at Sharia compliant options as they would at conventional options. So I'll just take 1 minute to say something else. It sounds very complicated. What is Sharia compliant asset management? What is asset management? 6 years ago, I had no idea myself. I used to work on the conventional side of the business. I used to, the more interest there is, the better. The more stable and steady the bond product is, the better. But when you take a closer look at it, it's exactly the same thing, but it's not only something for Muslims, it's for anybody who wants to invest within certain parameters. So if you break it down, and Tariq can break this down for you, you take out certain industries, alcohol, gambling, hotels, conventional banks, you take out certain financial leverages. What's left, you have a portfolio. With this portfolio, you want to beat the market. Instead of doing it yourself, I think Dathnar used the example of if you have a toothache, you don't take care of it yourself, you go to a dentist. It's the same thing. Instead of investing it yourself in the market, you give it to professionals. These professionals, they invest across many asset classes: money market, sukuk, equity, real estate, fund of funds. And your objective remains the same. And part of this objective is diversification. So you don't want to invest in one thing. You want to put in a lot of different aspects. So that's just an overview, because this is very new to Oman. What is Islamic asset management? What is it? So it exists everywhere in the world. We have sovereign wealth funds who invest in this. We have pension funds like yourself. We have institutional clients. We have corporates like insurance companies, the kafal industry. So it's there. To go into the technicals of comparing Sukuk with bond, on the face of it, it's very similar. The main difference that you have is that a bond is a certificate in which you loan money to a company as a pure debt. You don't know what it's being used for. It can be used for anything on the technicalities. Technicalities on Sukuk, of course, that has to be backed by some kind of asset. There is something that you're financing, there's something that you're building, there's something that you specifically know what you're doing. And you can, even if there's a halal component of that, you can take it out. It is relatively stable compared to, let's say, the equity markets. And if you look at the track records of these funds, which is exactly what happens, you will see the difference in the volatility. The reason that you don't see a lot of governments, even of local companies and local governments investing in these, is not really the fact that it's there. It's the fact that very few of these funds have been packaged to these, and most pension funds of Muslim countries, where a lot of the contributions are done for people involved in the Sharia-compliant banking sector, are still actually invested in these bond funds. And so they exist. We should take a closer look at it with anybody who's interested. And you know, it's all there for the taking. So please keep asking these questions.
Thank you, Rehan. Kamal, you would like to add?
Yeah, I think to put it in very simple terms, when we say do a comparison between a bond and a sukuk, as you would appreciate, bonds have various kinds. You have corporate bond, you would have a project finance bond, you would have an MBS, which is mortgage-backed securities. They are also kind of bonds. You have asset-backed securities, ABS. So there are various kinds of bonds. Okay? And the same would apply for a sukuk. So sukuk, which is from risk-reward point of view would be similar to a corporate bond, is something which should give you the return and the volatility depending on the market liquidity, similar to if the company has issued a bond, similar to that. But again, you have to look at the instrument. Is it an asset-backed sukuk? Then, of course, you are looking at the value of the asset and what are the risks associated with the asset and the cash flow being generated from that asset. If it is, let's say, Mudareba sukuk, then you are very much looking at the Mudareba, which is the business on which the Mudareba is done. Then you're looking at the risk in that business. If you are looking at a project finance sukuk, like we had, one was executed a month ago in Saudi Arabia for one of the huge refinery project by Aramco. Then you look at the risk associated with that project and what kind of assurances you have from the project sponsors. So it's not something very easy to say this is the sukuk and that's the equivalent. Each sukuk we have to look at the underlying business, underlying asset, underlying credit risk which is involved there. And then from that you can appreciate what volatility going to be. It could be because of simply market reasons. It could be very much because of the credit reason pertaining to the issuer, like happened in the case of Nakheel Sukuk before its default or before its kind of restructuring statement. And it could be because of simply market reason, like some of the sukuk, the prices are not more going anywhere simply because there is no buyer and there is no seller in the market. And this is another reason why sukuk have not been very liquid instrument in the market, especially in GCC, because of very high demand and very limited supply. The people who buy this paper, they tend to be, most of them are buy and hold players. They don't want to sell it because they don't have an alternative to buy. So if they sell it, what they are going to do with their money? All they're left with in the short-term instruments are the Murabaha deposits. It's more so with the Saudi market where I come from, but I believe it's true for other markets as well. So there is a gap, as we were mentioning a little earlier, between the short-term Murabaha deposits and the long-term debt instruments like sukuk. There is a gap of short to medium-term instruments when it comes to fixed income or when it comes to debt capital market instruments.
Thank you very much. If you could briefly add to this.
Okay. Well, two quick things. First of all, sukuk are not Islamic bonds. Islamic bonds do not exist. Sukuk are asset-backed securities. So obviously they're tradable in some forms, but there is no close equivalent, I guess, to it as a bond. So if you were to refer to sukuk, it's more similar to or behave similar to an asset-backed security. On the trading and volatility side, I think your question was, is it more or less volatile? I think to Kamal's point is correct. A lot of the buyers of sukuk, especially if they're big institutions, they'll buy and hold because they don't have an alternative. But on the trading side, I mean, I don't have a chart here to show you, but we did a comparison between Sukuk and conventional corporate bond index, and you'll see volatility in the corporate bond index, where you'll see more stability in the Sukuk side. So, I mean, I can share that with you if you like.
All right.
If I can just,
Yes,
if I can
please.
just add two additional comments there. For the last 2 years, out of the 780 million asset under management, 340 million is actually global Sukuk. We are currently managing 340 million global Sukuk. And global Sukuk is defined as US dollar based instead of pure ringgit. From an experience of trading, the liquidity is actually in Dubai and in London. Whilst we are based in Malaysia, because of the time zone, we actually start trading from 4 p.m. Malaysian time until at night. And the active investment banks that trades in Sukuk are any conventional bank, the like of JP Morgan, the like of Standard Chartered, the like of HSBC, because Sukuk effectively can be invested by conventional or non-conventional investment banks. And on the question on structure of the Sukuk, just one statement there. Sukuk can be issued by any issuer. It can be a casino that issues a Sukuk. But the proceeds of the Sukuk has to be for purposes of benefit of mankind, economic benefits, and for a social cause. So proceeds has got to be for bridges and schools and infrastructure, electricity, those kind of social economic benefits to the mankind.
Thank you very much. Tariq, I would like you to explain what is the difference between an Islamic equity and a conventional equity. But before that, I would like to ask Khalid Al-Ahmadi. He wants to ask a question.
Yes, I would like to ask if a new formed Islamic bank, would it be better to go for in-house asset management or they should outsource? That's question number one. I mean, which scenario is better? Second question is, how do you see the performance of the Islamic funds, especially in Malaysia, and which are mainly based on Sukuk in last, say, 5 years? Are you happy about the performance and the return of it? Thank you.
All right, thank you.
Can I give you the 1 minute answer on that?
Yes, that's right.
Don't do asset management. Don't outsource it, don't insource it. If you're a new Islamic bank, focus on doing your banking. You have consumer finance, you have ijara products you can do, building deposit base, building your loan portfolio or your financing portfolio. You don't need asset management for the first several years at least.
Why? The question is why?
No, I mean, my opinion is I think you should focus on your core first. If you're an Islamic bank, focus on your core. You don't need to start looking at asset management and, before you know it, you're off into private equity and you're doing all these other
Tariq, can I
fancy
take a
things.
stab at it as well?
Keep it simple. Focus on your
How
core.
about takaful? I mean, should they have in-house takaful or also outsource it?
Basically, if you are a new Islamic bank, just focus on core banking services.
Core
This is
bank-
the
That's
message.
Tariq's view. That's
That's
Tariq's
right.
view. I would disagree. I
Okay.
think it's very important for Islamic financial institutions where they offer the financing products to their customer, they should at the same time offer the investment products to their customers. They should work with their investment arm. I don't know, under whatever regulations you have, you might have to have a separate arm, and offer the opportunity to the customer to save for their future. It has been unfortunately the case that we have been focusing much more on providing the financial solutions to the customer for very good reason to meet their need. At the same time, we need to provide the customers investment plans, we need to provide the customers takaful plans. We have done surveys with the customers and we have found that customers say that we wish we would have been given this opportunity to plan to save for our children's education, for our daughters or our son's marriage, or for our retirement 15 years ago or 10 years ago. It's not that the products are not available. Products are available, but they are not available easily to them in their home market. So I would recommend for a new financial institution, Islamic, they should offer the Islamic financial investment products also. Coming to the point, should they do in-house or should they outsource it? Now, without knowing much about the cost and involved in that, my feeling is initially to bring the economy of scale, they are better off outsourcing it rather than putting a lot of cost upfront, because as was mentioned earlier, this business, it grows over the period. It doesn't really, you don't get $1 billion real under management in first year. It takes you time to grow it.
You have changed your mind, right?
Well, he calmed me down.
All right,
Yeah.
okay, that's right. This is becoming a very interesting session. Khalid, I would like to postpone the second question because now there are two hands over there, and I would like to give them an opportunity.
Yeah. My question is basically regarding the level of development, market development of fixed income. Right now, we have underdeveloped fixed income market for the conventional instruments. Now, what is your opinion regarding the level of development needed in order to facilitate the trading of the sukuk, for example, Islamic instruments, not only to be traded at the primary market, but as well to be traded at the secondary market? I think this ring is missing. If you would, we will highly appreciate if you can give us, based on your experience.
Yeah. Quick answer from Kamal. You know, we are running out of the time, but we will entertain another question.
I appreciate, this is a very important question. In GCC, you have UAE and you have Saudi Arabia, who are big market comparatively, relatively speaking, in the debt capital market, and they still don't have a very good secondary market. And the reason they don't have is that the basic fundamental, like the pillars for the secondary market are not available there. What do you need for secondary market? For secondary market, you need few things which like you have in Malaysia, for example, and you don't have in the GCC. Number one, you need a lot of good instruments, supply of good instruments, and they should start with sovereign instruments because sovereign is kind of risk-free for that market. Okay? Then you need the secondary market players. Who are those? The traders. The traders on the treasury, the traders in the treasuries who are managing the trading book. You need them. You need pension funds change their policy of invest and then sleep over for the rest of the maybe life of that instrument. You need insurance companies and other players, and they of course need to have first assets to trade. So the secondary market trading traders are not many there, players are not there. Number three, very important, is that you need the regulatory framework for that. So unfortunately, it's a long way to go. I'm very happy to hear their news, and you must have also heard that in Saudi Arabia there is a development that you will have a quasi-sovereign instrument very soon in the market. We have been asking for it for now last 7 years. The problem my trading desk faces in Saudi Holandi Bank, I always encourage them to trade in the sukuk they have. They say, if we trade, because normally it's our Islamic customers who want to buy, they say, if we sell to your customer, what will we do with the money? We don't have anything to park that money, so to say. So if you have sovereign, let's say, debt instruments, and they are in big size, you can park your funds there, and then you can look for another opportunity to invest again. That's what stimulates trading. Okay? That's, I believe, very nutshell answer to your question.
Thank you very much. We have this last question from the back. I can't see. I think this is Dr. Umar Farooq. Yes.
Assalamu alaikum. I can't resist the temptation to go back to the first question that you raised. That's about the Thomson Reuters introducing up at the interbank platform, and that 1 minute answer, the way it was given, I do not think that it is appropriate. I was present where this product was launched. I was able to observe the reactions of various banks. Indeed, I was also familiar with the background that this product was developed because there was certain level of demand from the banks themselves. It is an absolute shame that we say interest is haram, and we should say it, but at the same time, we become comfortable with interest-based benchmarks. So at least the products that are coming to be launched as a substitute, we should give an opportunity to take a look at it, that whether it actually is the desired one that we are looking for, or at least one of them, rather than dismissing it so summarily, it doesn't help.
No, I didn't dismiss it. I just.
Thank you very much. Basically, you have made
time
a
will
point.
tell.
But I don't think this was your intention. Basically, Tariq said that well, he doesn't know much about it, but this is a new product, and it will take some time before the market players become used to it, right? And this your sentiment is actually shared by the panel over here. So I think there was a kind of misunderstanding. Now, before we conclude this session, I would ask Datuk Noripa if you could kindly give us a summary of Islamic capital market in Malaysia. How is it doing? What is the size of Islamic capital market in the total capital market in Malaysia? And what are implications for this kind of development for other countries?
To answer Khalid directly, there's about 170 Islamic funds in Malaysia, of which 30% are Sukuk fund, and the balance equity or balance fund. The Sukuk fund started in 2001 and has been very, very popular because it is actually a substitute to fixed deposit. At the same time, it's also very popular for institutional investors because institutional investors, if they invest in fixed deposit, they'll be taxed. But if they invest in a fund, they're not taxed. So the Sukuk becomes very popular to institutional investors, Malaysian domiciled, and at the same time, the retail investors was also finding it a lot more better capital gained than investing it in fixed deposit in the bank. Now, whilst we are on the topic of capital market in Malaysia, Malaysia pioneered the Sukuk space, and the first Sukuk that was introduced by Malaysia was actually not from an Islamic jurisdiction and also not from an Islamic corporate entity. The first Sukuk actually was $30 million US, and the issuer is ESO. And as you know, ESO is not based in anywhere in Asia. Again, on the growth of Sukuk, the total space globally for Sukuk, I think now comes about $30 billion US. And out of that, Malaysia contributed an issuance of about 62 to 64% of the total global Sukuk. And Malaysia do not distribute the Sukuk just in Malaysia or just in Asia. It is actually internationalized by making sure that every Sukuk issuance, we are able to get a Regulation S approval by United States and Section 144A of the United States. And as such, you're actually able to sell to US domiciled investment banks, Treasury Department of these investment banks, and with that, there is broader investor base, and at the same time, it encourages liquidity, and the pricing for Sukuk and fixed income as an outcome of it being internationalized is now a lot more at par. So there is not much difference from a pricing and trading standpoint, whether it's fixed income or it's Sukuk.
I'm sure we would have continued more, but unfortunately, we have run out of time. I would like to thank all the panelists for very valuable contribution to this panel. And as a gesture of goodwill, some of you will receive another gift, and others would take their first gift.